Alrighty, now let's move on to the next most important topic here. And we're going to talk about Fibonacci retracement levels and extension and what they are. And this is like hands down one of the best thing that believe in. If it was not created for traders, I don't know what you would be doing right now. Okay, so what I'm going to do is I'm going to go to Google once again and let's talk about Fibonacci. So, what's Fibonacci, right? What's Fibonacci? First of all, I'm not going to dive into the mathematical, equations and what this is. So, but let's just read an overview of Fibonacci levels are used as guides, possible areas where trade could develop. The price should confirm prior to acting on the Fibonacci level. In advance, traders don't know which level will be significant, so they need to wait and see which level the price respect before taking a note. Now, that is a very huge overview, which was kind of boring, honestly, for me. But I'm gonna say Fibonacci retracement. Um, what is Fibonacci? Okay, what is Fibonacci? What is Fibonacci retracement? And then I'm gonna search this one for you right there. Now this is the best thing. Simple, put simple. Okay, no big fancy crappy stories. In finance, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. That's the only first thing that you want to learn. Simple. It just tells you where the next support is going to be if you're going to come down after an uptrend, or the next resistance, where is it going to be when you are going in a downtrend. Simple. So how do you use that and how do you determine? Now a simple scenario would be this. Let's say Joe the trader came in to take a new trade. Okay, how is it going to know when the market is actually moving to the upside? Where are you going to go and stop? Where are you going to go and stop? Now, and take your own profit. Let's say he took an entry right over here. How is he going to know where am I supposed to sell? I mean, yeah, the market is going to go up. Now, sometimes you might say a bull flag is there and you can go to the target. Pretty simple. You don't need Fibonacci retracement, because once you go up, you come down, make a bull flag, then you are going to continue as much as you came from the downside. You don't need Fibonacci. But let's say you don't have a bull flag, you don't have any other kind of stuff. Then how are you going to do that kind of trade, right? Where are you going to take your profit? Where are you going to actually try to stop your losses as well? So you're going to use Fibonacci retracement, extension. Now I'm going to talk about what Fibonacci extension is as well, okay? And I'm going to tell you in detail what Fibonacci retracement really is, and of course how to use them as well. Okay, so Joe the trader, he places the fib retracement and he places another fib retracement over here, and then he knows, oh, okay, this is where I'm supposed to sell. Right. On a picture where it's pretty simple, it's an overview, but let's dive into this chart over here. Now, the one thing I like to explain about is Solana to USDT. Okay, this is one of the best explanation that I have when it comes to explaining the fib levels. I'm just going to, I think I want to remove everything, but I'm actually going to open up in a different exchange. Is this going to be cool? No, I'm just gonna go back into the Binance exchange. Excuse me for that delay. Anyway, let's go back into time. And right now on the Binance chart, I want you to let's go back to replay here. And I'm gonna tell you a time when we were back in 28 July 2021. Okay, now during this time, you already saw the market was rallying to the upside, and boom, 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 you went all the way upside. Now, what I'm gonna do is I'm gonna take the top to the bottom. The first thing you want to take is a swing high and a swing low. In simple words, do you remember the impulsive wave, the correction wave, the impulsive wave and the correction wave? You want to take the lowest part of the impulsive wave to the highest part of the impulsive wave to predict the next impulsive wave, or to even predict where you're going to stop for the correction. Two things: where you're going to go for the correction and where you're going to go for the impulsive wave or the next move to the upside. And there is a condition where if you lose that level in the Fibonacci, then you're not going to go up, you are going to go to the reverse, to the downside. And what is that number and what is that setting? We're going to talk about that one. Now let's just go back into Solana once again. What I'm going to do is I'm gonna go here on the left side of your screen, okay? So when you go to the left side of the screen, you wanna click that one, and you're gonna see Fib retracement, simple. Now, normally, you see, this one over here is a log scale turned on the tradingview.com. I do have the log scale, and when I'm gonna place the Fib retracement, you can press Option F or Alt F on Windows, and it's gonna actually bring up, or you can just go to the left side over there. So right now, what I want to see for the retracement of Solana during this rise to the upside is I'm going to take, first of all, the lowest point to the highest point. Now remember this rule very, very carefully. Listen here very carefully. You don't want to miss this. When you're looking for the retracement, let's say it came up here and this is your top. How far are you going to go before you even go to the upside? That's the question. So for that one, you take the lowest point to the highest point. Okay, and if you want to predict where it's going to go up, then you take the highest point to the lowest point of that retracement if it does come down here. Okay, bear with me, this is going to make sense. It's very simple, really, really simple. Okay, so I'm going to lay it down from the bottom to the top. Now look, you're going to get some lines over here. So what are these lines? These are retracement lines. Like, where is it going to go down to retrace? Now, number one place it's going to retrace to is the 0.236. And keep in mind, if I go to the settings over here of the Fib retracement and I click the cog icon, not this one, sorry, where's the Fibonacci, is it this one, guys? Visibility brush. Okay, I'm just gonna select, okay, sorry, I'm gonna select the Fib first of all, and I'm gonna click on settings, and if you go down into the style, you're gonna see Fib levels based on log scale. Okay, if you actually saw the previous video on using the tradingview.com and you want to actually turn on all of these numbers, and you don't, I mean, it's not important for you to understand what they mean, and click OK. Now from here, guys, what you see basically is the retracement level based on the log scale. Now if I turn off the log scale, you're going to see Fibonacci retracement being different, and you're going to see the chart itself being absolutely different. So if you turn off the log scale and you take the bottom here to the top right over there, you can see that the Fibonacci actually retraced all the way down to the 0.618. Do you understand that? This is how it looks like. So the question still comes in, why, before I even talk about the Fibonacci retracement, why do we turn on the log scale and we turn off the log scale? Why do we even do that? And it's still important to actually analyze the market when the log scale is turned on and when the log scale is turned off. It's really, really important. Now I'm going to tell you, and I'm going to explain why is the log scale really, really important. Now let's say if the prices of an asset like Solana is you're watching Solana in a small time frame, let's say the 4-hour time frame, maybe the daily time frame, it's really recommended that you turn off the log scale. Okay, if you turn off the log scale, that will be an arithmetic calculation, and that will be a much more near precise calculation when you're looking in the 4-hour time frame, the daily, and the 1-hour time frame. But let's say you're analyzing something based on a larger time frame, on a very, very large scale time frame, and this is going to make sense in the next coming videos when I'm going to talk about how the bear market and the bull market of Bitcoin, and how we can use Fibonacci retracement to recognize the next impulsive move and the next bull run, where it's going to end and where the bear market is going to end. We are going to be using log scale based on that, because Bitcoin, we are going to be analyzing Bitcoin based on a 10-year data. Do you understand that? So for that one, it's really important to turn on the log scale, because it has a way more different calculation, more than turning off the log scale for the short term calculation. It's that simple, nothing else, nothing fancy. So if you're looking at a like, you know, the near targets, the smaller time frame, you can turn off the log scale, but it still doesn't mean that you can ignore the log scale. Now look, if I turn it on, you still have the calculation right over here, where you can actually see that Solana retraced to the 0.236 of the Fibonacci retracement, right? But if I actually turn it off, then you're gonna have a different retracement, and in this retracement we saw that Solana actually went to retrace here. Now, as back to the example, I said that when you went up like this, and this is where you stop, how far down are you gonna go and stop before you go to the upside? Well, it stopped where? It stopped at the 0.618. Now, what is 0.618, you might wonder? Let's say from here, was you entered here, you were zero, you had $1 or $10, and then you went all the way for 100% up to the rise, and then you cashed out at $100. So this was like not 100 but $20. That's 100% increase. You doubled your money. Okay, so this level is known as a zero. This level is known as the one, right? Is known as the one. How much down did you come then? You came for 618. This is almost nearly like 61% of retracement you came down. Do you understand that? Which also means, in other words, that what is like the 60% of 20? If you do the calculation, it's roughly nearly like the 14. You came down to the 14, in my opinion, or maybe a little bit. Let's say it's 14, okay? And what about the 0.5 level? What is the 0.5? 0.5 is the half of it. So if you retrace from 10 here, between 10 and 20, that actually takes you to the 15, okay? So what's the middle number of 10 and 20? The 15. And likewise, you're gonna have the 0.32. That means that you only retrace like 30% of it, so that takes you down to where? Almost like $16 to $17. So that's what it means actually. This is the number. This is the retracement number. We're going to get into extension as well, and what is extension. But first, retracement is when you're coming down to hold the support after you've actually make a move to the upside. I hope it does make sense now. So when you end up like this, okay, you're wondering, where is it gonna go down and where is it gonna stop? Now look, it went all the way down to the 0.618 right over there. So it actually retraced from there to there nearly. You can even see it is 60% or 61%. So that means that what Fibonacci is just telling you is that it retraced 61%, and that's what the 0.618 means. Let's say it actually retraced a little bit down to the 0.5. It means we retraced 50% to the downside. Simple put, okay? Now, let's move on. And from here, you actually bounced off the 0.618. When you came down, you bounced off once, second, and twice. And you can see this was a huge level of support. But I actually told you, what if you lose the 0.618? This is known as the golden ratio. This is known as golden ratio, right? So if you lose the golden ratio, you have the chance of not going up and actually continue to go to the downside. So let's say Solana, it actually closed here. You can see closed with the wick, went to the upside, came down, closed with the wick, go to the upside, and then made a triple bottom, and we talked about triple bottom. And from here, if you start to lose the 0.618, what will happen? You would actually start to go down, and you would actually normally go to the extension level of the 1.618. Now, when you leave the 1, because this is the 1 and this is the 0, right? I actually told you, it's confusing a little bit, that this was the 0 level, this was the 1, and in between you're going to have 0.7618, which is the 70%, the 0.6, the 0.5, 0.3. Now, this is when you're taking when you're looking for the uptrend and you're not looking for the retracement to the downside, okay? But when you're looking for retracement to the downside, this is gonna be a 0 and this is gonna be a 1, basically. Do you get my point here? So it just reverses to the other side, and but that doesn't matter. That doesn't matter. What you have to understand is that when you're looking for the retracement to the downside, you just take this level and this level. The number 0, 1 doesn't matter. It's okay. Don't get confused in here. So when you cross the 0.618 and you start to go down and you lose the 0.786 as well, then you are looking to go to the 1.618. This is where you normally come for the extension. This is your extension. When you lose the 1, any number after the 1 or the 0 is going to be extension. It's an extended, and you can actually extend all the way to the 2.618. Okay, you can even go to the settings and you can actually extend the fib extension even more. If you click on the settings, you can actually say, I want the 204%, the 300%. I need the 320%. You can even extend it all the way to 460%. Okay, so this is the extension level, and if you click OK, you're gonna see you have even way more bigger extensions of where you're gonna go. But I'm actually gonna just remove some of them and go back here. But normally, what you want to know is that when you lose the 0.618, this is known as a reversal wave, and this correction is not good. This uptrend is cancelled. I mean, you do know uptrend is impulsive wave, correction. Now we need another impulsive wave, and we're going to talk about how do you actually analyze where are you going to go to the upside. If you were back here in 25 July 2021 and you were buying down here to $23, how would you know that I'm going to cash out at $200? That's the beauty of Fibonacci, right? Or if you lose this level, how do you know if I open up a short position at 23, then I'm going to actually be selling Solana at minus 34? And yes, prices can go to the minus direction as well, by the way, if you didn't know. So that's the retracement part or correction part of this one. Now let's talk about the impulsive move of things. Okay, now this is where you came down, this is where you took your support level, because by the end of the day it tells you your support and resistance level. So you can already see you came down, once bounced of the 0.5, you went up to the resistance of the 0.236 right over there, and then after here you actually bounced off the 0.618, and there you find a big level of support. So where do you actually put your stop loss? You put your stop loss at the lowest wick right over there when you lose it, and you have a confirmation of a loss, and then you're gonna go to the downside. All right, so let's talk about the impulsive move to the upside and how can you notice where Solana is gonna go and stop. Okay, so I'm gonna take the fib retracement, I'm gonna take this top here to the bottom right over there, and I'm gonna lay down my fib retracement at the lowest point. Remember, you take the top and you take the bottom for the next move to the upside. For the move to the downside, you first take the bottom and then you take the top. Simple. And then you're going to find the retracement levels. Okay, now let's zoom in a little bit here. And during this time, I could have told you, you are going to go and find resistance at the $33, at the $38 resistance, $42, $49, $58. But if you cross the 0.618, I could have told you you're looking to go to the 82 as well. And you can even continue, you can actually extend yourself all the way. You can even stretch to the upper Fibonacci extensions over here. So what happened here, I'm going to show you. Now let's play the bar candle so that we can understand better. So here we go. Boom, boom. Candlesticks were printing up like this, and as you are moving up, you can see Solana, what it did is it went up to the 0.382, came down and find support. Do you see that? Find support is 0.382. All right, let's see what happened next. Candles keep playing on. Boom. Now you cross the 0.618. This is the golden ratio. Put a tick here. You always are meant nearly historically to go to the 1.618, and this could have been your take profit level. Do you see that? And not only that, we're going to actually play even way more candles. Boom, boom, and look at that. Okay, look where you actually, right on the head. Do you see that? Right on the head of the 1.618. And where did you come back to find support? Look at that. You are finding support where? At the 1.272. Pretty amazing. Now after that impulsive wave to the upside, you can remove your candles from here because you've hit the 1.618, and you want to see where are you going to go and retrace to the downside, of course. So you take the bottom to the top here, and what is going to be your next level of support if you come down? And look, you actually bounce off the 0.236. If you try to go to the 0.618 and lose this again, then you're not going to go to the upside. So let's see what happened. Right, you bounced off the only the 0.236, and you made what? You made a bull flag as well. So here we are, and you took the bull flag from the maybe the top, is it this top to the bottom, and you can just place the bull flag, and the bull flag is going to tell you where you're going to go. So you could have gone all the way to the 135, but let's actually look on the Fibonacci retracement or the extension of for the next move if you do that. Okay, so I'm going to remove all the drawings. I'm going to remove this drawing over there and this drawing over there, and let's place a little bit of a fib retracement from the top here to the bottom for that corrective wave over there. And now let's see what happens. So what did you do? Once again, you actually crossed the 1.618 as well, but this was bound to happen because of the bull flag, and the bull flag takes you all the way to the upside right over there. Sometimes it's just better to leave one Fibonacci that of the previous, impulsive wave. For example, this one right over here. So I'm just gonna bring back this Fibonacci from the top to the bottom again, and I'm gonna place it right over there, and you can see, where did it go? It even go to the 2 of that previous swing high to the swing low over there, to the 2 level, and it hit its head to the 2. It hits its head to the 1.618 as well. If you keep on playing the candles, look, it even went to the 2.272. Let's keep playing the candles. It went to the 2.618 as well. Let's keep on playing the candles, guys. This is so fun, right? You can play the candles and you can see you shoot to the moon, guys. You even shoot all the way to the 4.236. Do you see that? So you can continue on and on and on, and it just kept on coming down. And look where you retrace once again. Do you see that? Where did you retrace? You almost retraced all the way to the 2.618 over here. Look, you bounced off the 2.618. So let's continue on. Okay, I'm just gonna play the candles. I'm gonna increase the speed here, and let's play the candles by themselves. Okay, you can see you just continue to melt towards the upside, even the upside, even the upside, and you are not stopping. Yeah, the candles are just gonna be printed out even more. Okay, I'm just gonna close it right over there. But did you notice how we didn't have any extension right up over here? That's where I like to turn on the log scale. If I turn on the log scale, you can see that the Fibonacci retracement now looks different, and it actually gave us the 2.272 right over there, because this was a large time frame Fibonacci retracement over here. So sometimes when you don't get the numbers with the log scale turned off, you can turn on the log scale, and there's a different calculation for this one, which is going to give you a stretched sort of Fibonacci retracements. Okay, one more thing that I want to actually tell you as well is the SHIB. Look at SHIB, okay, on Binance here. So let's talk about SHIB. And right now, what you want to say is that you want to take this top here, and you want to take this bottom over there to predict if you went up here, and how you could do that, because this is how when I was investing back when I was down here, I predicted that SHIB is going to go and stop at the 8,000 level, because that's where the end of the 1.618 is. So I'm going to take the fib retracement from the top to the bottom again, just like that, and I'm going to lay it down, and look where it went, to the 1.272, nearly 1.272. But I could have told you that if you cross the 0.618, you could have gone to the 1.618. We didn't go there, right? We didn't go there. But on a larger, on a log scale, we're still holding the 0.618. So this, if you start to lose it, and you're going to create a huge reversal wave to the downside. So SHIB to me one day is going to go to the 2,000, 20,000, okay, from here, because you're holding the 0.618. Put a tick there, and this is where you're looking to go in the future. But that is not quite right, because the log scale was turned on. Now I'm going to turn off the log scale. This is the log scale turned on, and I'm going to place the fib retracements again. So when you take the retracement from the top all the way down again to the bottom, just like that, you can see that you did cross the golden ratio, which was 0.618 up here. When you went up like this, you made a pennant, and then from there, where did you go? You went to the 1.618. So put a tick there. You're looking to go right over there. Now, why did I turn off the log scale? Because I was just observing on a daily time frame. So daily time frame, when you're looking for fib retracements, is also good, but you also should observe while the log scale is turned on. Okay, you must observe that one as well. So that's it for this fib retracement exercises. You guys can open up any coin you want to. Just take that impulsive move. One last example that I'm gonna give you for a beginner practice. I'm gonna open up ANC to Tether, and you can see that this coin was in an uptrend. I'm going to turn on the log scale back here, and while during the uptrend, guys, I'm gonna dive into the smaller 4-hour time frame over here, and we do know how an uptrend looks like, and look at this series of impulsive move and corrective move. So what I want you to do is go to ANC to USDT, and I want you just to practice for yourself by taking this top to this bottom. Act as if you were back here in this time. How could you know that you would go up to take profits over here, or if you bought right over here, how could you know you're going to go over there? I'm just going to do a little bit of this one with you so that you can understand even way more better. So I'm going to take the fib retracements again, and right now what I'm going to do is I'm going to take this top to this bottom right over here, and if I zoom in there, you can see that what did you do? You actually came down, you crossed the 0.618. Where did you go? To the 1.618, and then you start to retrace. Okay, so when you retraced, where was your next retracement level? Where would you go down to? Okay, when for the downside, I already told you, what do? You take the bottom of the last swing low to the swing high of the impulsive move, and you're gonna find your retracement. Where did you bounce off? The 0.5. This was your entry right over there. Do you see that? Once you entered here and you want to predict the next take profit, again, take the top to the bottom right over here, and you can see this one nearly went to the 1.618, nearly, just nearly. But then again, this is what I want you to do, the impulsive wave, and placing the fib retracement to the swing low and the swing high as well. You can do this many times, as much as you want, okay, as much as you wish to do. Okay, so in here you actually went down for reversal wave. So what I'm gonna do is I'm gonna take this bottom there to the top right over here, so we can actually predict where ANC is gonna go. So when you went to the downside like this, you bounced off this area to the 1, okay? So you went up to the 0.618, you failed to cross the 0.618. Do you see that? You actually went below the golden ratio, and I told you when you go below the golden ratio, you're looking to go to the 1.618, and that's what you did. Absolutely, put a tick there, and this is where you're looking to go. So it works on an uptrend and it works on a downtrend as well. So that's it for this Fibonacci video. I think this is the if you got this part, I think you're just going to be good enough for trading using the fib levels. And I'm going to see you into the next video, hopefully with the new thing called the Elliott wave theory, and see you into the next one.